talk a little bit about credit scores while we're at it. How many of you know what a FICO score is? How many of you have no clue what a FICO score is? You need to know. Bottom line, a FICO score is the score that the credit agencies give you for your credit standing. So a credit score can run somewhere between, well, I guess I can go lower than 300, but 300 to 790, 780, somewhere up there. The higher your credit score, the lower costs of interest when you go to take out a loan, to buy a car, to buy a house, to get credit for, opening up a water account or they'll look at your credit score. The higher your score, the lower your cost of money if you take out a loan, okay? The lower your score, it becomes very, very difficult to take out a loan and people don't want to give you credit. How do you improve your credit score? Well, if you can get an account where you have an electric account and you make your payments every month, that will improve your credit score. If you have a credit card, and we're going to talk about those in a second, does paying off your credit card every month improve your credit score? Yes or no? No, it doesn't. If you pay your credit card off every month and you carry over no balance, it will not improve your credit score. So am I suggesting you carry credit on a credit card? No, don't put that on tape. Yes, sir.
I thought your score is also affected by your debt to
it is.
Credit ratio.
Yes.
Where if you have like $3,000 worth of credit and
Yep.
no balance, that's going to help.
It does. Good point. Did you guys get that? Your score is also affected by the number of possible loans you have out there. So if you have multiple credit cards, it will lower your credit score. If you have multiple credit cards with debt on them, it will lower your credit score. If you have a few credit cards with a little bit of debt and you're paying it off on a regular basis, it will increase your credit score. So I do not encourage you to get a ton of credit cards because it will drop your score, right? If you've got a car loan, a home loan, 3 credit cards, 2 gas cards that you're carrying a balance on, it's going to drop your score like a rock. So you don't want to have multiple credit cards or multiple loans at the same time. Does that make sense? Back to the carrying a little bit of a debt on a credit card. If you choose to increase your credit score based on your credit card, you can do that with $5 or $10. Just carry over a tiny little amount and pay it off next month. And then, take out, if you're going to put stuff on your credit card, just take out enough that you can do the same the following month. Just carry a small balance and it will ultimately improve your credit score. You guys get that? Any questions about that? You can check your credit score in a couple of places. I think annualcreditreport.com, or I think it's...
If you go to, if you just Google free credit report government,
yes.
they'll get you to it.
Yeah, freecreditreport.gov.
It's annualcreditscore.org or gov.
Yeah, I think it's gov.
It's not, I don't think it's a com.
No, you're right. Yeah, it's gov. What's the one that does all the commercials? Freecreditreport.com? Yeah. You can actually do that, but what they'll do, they'll put you into their magazine subscription list. So yeah, you get a free credit report, but then they suck you in. And you'll kind of, unless you cancel it, they'll start sending you like a monthly magazine. Now they do check for stolen credit, Social Security numbers. So there's some things that are valuable. I can't encourage you enough to protect your Social Security numbers, because if somebody gets a hold of your Social Security number or they get a hold of your credit card number, you can rack up a lot of debt really fast. Now the difference in using an ATM card and a credit card, you guys know about that? If you use a credit card, you don't have financial liability on the expenses. You can go back and they will cover the losses that you sustain with the credit card. If you use a debit card, they will not. So if you use it right out of your checking account, it's much harder to get reimbursed. If you run it at the restaurant and somebody sneaks it in the back and gets your details off of it, they get your little secret code on the back, you could be in real trouble. So you got to be really careful about credit cards versus ATM cards. My wife always gives me grief because I don't like to give, I'd rather pay out of my checking account than I would my credit card, because then I know it's paid for, other than, it doesn't come around as debt. So, did you get as you're reading that, did you get the danger of credit cards? Is this amazing? And you look at that and you go, well, a lot of the people that they're talking about there aren't very educated. They aren't very savvy. They let themselves get into trouble by getting into debt. And for those who are kind of watching on the computers, this article is talking about how risky and dangerous it is if you have a credit card and it's maybe a small amount that they're going to loan you, and it's a probably pretty decent interest rate, and you take it and pretty soon it's filled up, and they know that it's filled up, and they'll send you an ad saying, hey, you can get another card and here's the interest rate. And what happens is people really do, they'll take out that card and they'll make payments on the second card, on the first card, then they'll get those two filled up, and they'll take out a third credit card and they'll make payments on the second one and make payments on the first one, and they get deeper and deeper and deeper in debt. And it's so amazingly dangerous. It is so risky. So when we talk about credit cards, when we talk about the importance of being cautious with credit, this is what we're talking about. Credit cards are the most expensive interest rate that you can pay, right? I always have students say, I've seen credit card offers where it's a 0 interest rate for 6 months or a year. Is that a good thing? And I'll say, if you are able to control your spending and you roll a large balance onto a card for 6 months at 0%, great. Make sure that you're checking the fine print, however, because oftentimes those 0 interest rates at 6 months or a year and a half can be 18, 20, 24% interest, right? Interest rates are so low right now, a credit card is the last place you should be going to put some purchase on it, right? So it's very, very dangerous. A couple of thoughts about credit cards. You can actually call and negotiate your interest on a credit card. You can call the company, the bank, and say, I've got an offer from another company. My interest rate's 18%. I don't want to pay 18%. I'm going to move my credit card over, or my debt over to another card. And if they say, well, we just can't do anything about that, ask to talk to a supervisor. And card companies are in a place right now where they don't want to lose your business, and they will actually negotiate down your interest rates, right? Back to the idea of a 0% card. Check it out. I've actually done it. I mean, it's a good way if you've got carrying a balance at 8 or 10 or 12%, and in 6 months or a year, you can pay that debt off. It's not a bad way to get a 0% interest on a credit card. But beware, any new purchases you put on that card are going to be at a new rate, or they're going to be at a greater rate, right? It's a very, very dangerous place. So you've got to make sure that you're strategic in how you use credit cards. Any reflections, comments, questions about credit cards? Yeah.
Do you need a credit card?
Yeah, actually it's really good to have a credit card, because once you get out into the world, if you want to rent a car, they'll ask to see a credit card. If you want to use a hotel room, they'll ask to see a credit card. There are places where credit cards are invaluable. They're really, really of value. I always have students say, how do I qualify? Because my FICO score is so bad, how do I get a credit card? Well, there are places, in fact, we've got banks that come visit campus that offer fairly reasonable interest rates, low finance amounts, so they won't go more than maybe $1,000. But if you are good about it, if you use that card, you don't exceed the credit limit, they will grow that. That's one thing they're ruthless about, if they see that you're making payments, they're going to try to bump you up on how much you can have credit on their card with. So it's really easy to get a card with a pretty reasonable interest rate and a small amount of credit, and it'll grow. So yeah. Susie Orman, I don't know if you've read anything by her. She's done a lot of writing for your age, and she says, yeah, they're a good tool. I say, yeah, they're a good tool, but be very, very careful with them. Good question. Anything else on credit cards? Yeah.
What about opening and closing them?
Yeah, it's to your advantage if you've got multiple cards. It's to your advantage to narrow that down so that maybe you have just 2 or 3 or 1 or 2 cards. Is that what you mean?
Yeah, but so if you have a 0% interest rate.
Yeah.
And then by the time you're done paying off whatever you wanted,
Yeah.
0%.
Yeah.
Because it was going to take you that long, then would you just close it, or how would that look?
Credit companies, the credit agencies look at the number of cards that you have. They also look at the number of closures and changes. It's like being in a snake pit. Don't make any quick, jerky movements because it'll get you. So it actually will hurt your credit score if you start canceling all your cards and you just cancel 5 or 6 or 8 cards. They're going to go, ooh, something's going on, and it will actually reduce your credit score. Ultimately, it will rebound because you don't have as many opportunities for debt out there. So it's good to close them, just do it strategically. Do it very, very carefully. Make sense? Anything else? Okay, my caution, yeah, I'd kind of pursue it. It's good to have. Pursue it carefully. Now there are, like my ATM card is also a credit card, right? There are banks that will do both, where you can have an ATM that also works as a Visa. And that's a good way. It still doesn't have quite the protection of another type of credit card, but it's a good way to kind of work on your credit. So, okay. You can hold on to those articles. It's a couple years old. There have actually been some really good changes that the government has put in place with the credit card companies on advertising. Credit card companies can't advertise like they used to. It used to be that they were ruthless. I mean, they were just ruthless. And Washington, one of the good things Washington has done is put some parameters around what credit card companies can do. So it's a little bit better than it used to be. Okay. So that would be negotiable debt. That's bottom line is credit cards are one of those areas where you can choose to pay less than the whole thing off, right? You can make a payment that's less than writing the whole thing off. Do I ever encourage you to do that? Try to avoid it. Try to get it paid down. When I do my budget at home, credit cards are the first thing that I pay because I want to pay as much of that down as I can. It's the worst interest rate. It's the worst kind of credit to have. You want to get it paid down. So it's usually, do I ever suggest the minimum payment? Only if it's, if it's a brutal time and for some reason you have to pay something else. But try to pay more than the minimum payment. One of the things that the law has done, it's now put into a credit card statement the amount, how long it will take you to pay down a credit card if you pay the minimum. And if you look at that, you will cry because it's crazy. It's absolutely crazy how long, if you pay the minimum amount on a $1,000 debt, it could take you 3 years and it'll cost you $4,000 to pay down $1,000. It's absolutely ridiculous. So check that out and it'll be a great encouragement for you to pay as much as you can. Okay, enough about credit cards. Number 8. Clothing. Clothing. This is the girls' favorite topic. And some stylish guys. That pen is not working. Clothing. Now, really we have 2 categories when it comes to clothing. And this may sound a little funny. The first one is must-haves. Okay? What's a must-have? Thank you for sharing. That's not what I had in mind. But it's a good answer. Must-haves are things like nursing uniforms or business suits. If you're, I can't believe you said underwear. That is so funny. It's stuff that you have to do your job, right? if you are a construction worker, steel-toed boots. I mean, those are the kinds of things you've got to have to do the work that you are doing. So that is the must-haves. The second category, which actually doesn't fit here, it fits later, is entertainment-related. Okay, now you're going, that sounds really bad. Entertainment-related. Entertainment-related is basically stuff that, you know, I got to have that because it's so pretty, right? I really want a new skirt because I'm going out to dinner and I want to look, well, not me personally, but you get the idea. It's clothing that is really fits in a different category. It fits into a category later on. So in this category, we're really talking about must-haves. Entertainment will come up a little bit later, right? Next is savings. Savings. And there are two types of savings. There is long-term and there is short-term. So let's talk a little bit about the differences here. Savings is putting away for future needs or retirement or purchases that you know are coming up. This is a consideration before entertainment, and if you leave this to the last, it won't happen. So here's my advice in this area of savings. Put something away every month, even if it's small. Remember when we talked about compounding? Same principle works here. If you put a little bit in, even if it's $10, $5, put something into savings and it will be compounding. It will grow. It will continue to grow for you. Long term, excuse me, is retirement, right? Retirement, it's that income that you're going to need at some time in the future that you're not accessing right now. Short term are things like I need tires for the car, or I know I'm going to have to make an insurance payment in a while, or you know, I'm saving to buy whatever it is. That's the short term savings. Two differences. This could be long-term care too. With my mom, we bought a long-term care for her. When she hit a certain age, we knew that if she couldn't live at home, she needed to go into a care center. An insurance policy would basically pay for that. She lived to 88. When she was 87 and a half, she finally got to the place where she needed this. We moved her in. She was there 6 weeks, and I don't remember what we paid. It was craziness. But it's an insurance policy. Is insurance good to have? Yeah, because it could have happened at 70, could have happened a lot earlier, and we would have utilized it, right? We didn't need it, but it was there if we did. So that's the long-term care.
We hope you enjoyed this message. Biola University offers a variety of biblically centered degree programs, ranging from business to ministry to the arts and sciences. Learn more at biola.edu.